Thank you. My name is Bill Bierce. I'm a lawyer from New York. And one of my issues is if you're going to be looking to the future, trading in derivatives on outsourcing contracts, and that's been proposed before, but it never got anywhere because you have these termination provisions and you have a disparity in cash flow and risk management. Do you anticipate that in the future you're going to have a, quote, standard outsourcing contract, which basically will be negotiated on the basis of price and something that a credit risk manager can then take to the market, aggregate, and then sell?
No, I think it's time to re-educate our credit risk managers so that they don't expect things to come in quantized packages to be able to understand the risk. I think the investment community has stepped up to a large extent to understand sourcing and outsourcing and service companies. I completely understand the need not to strand an obligation to serve in the trading of, a CDO or a CDS or something else. But actually, it's not a massive leap away from where we are today, as long as we can understand how to recognise revenue, what the potential cut-off point for a particular supplier might be, and what the investment returns are for the PE involved, or for the private investor if it's a unit trust type structure that comes out of this market. So I don't think we're a million miles away, but there are some technicalities to deal with, of course, not least of which is the kind of having highly educated 24-year-olds doing the trading for you. We need far higher educated and experienced risk managers to actually define the overall basket of risk. One of the interesting things that comes out of looking at outsourcing from a traded derivatives point of view is basically the traded derivative gains the credit rating of the basket of customers, and the most risky, so if you can basket up AAA rated outsourcing contracts, you've got a AAA rated investment vehicle with a very, very high rate of return that just, why wouldn't you want to invest in that? It's just fantastic.
Okay, I'm presuming there's no more comments or questions. Anyone? Yeah. Can I ask Stefan to kick off a summary? The basic question, where do we stand in our discussion on fueling India-EU trade investments? Is it going to be build or buy? Your conclusions. Also, maybe if you could add, what are the kind of lines of businesses or verticals that you see the maximum opportunity for Indo-EU service trade?
Yeah, from my perspective, basically the panel kind of confirms one view, which is there is tremendous growth to be expected in continental Europe, which of course also has something to do with the low base, but still. And it's going to be a gradual path. There are probably no gigantic steps, but they're going to be highly targeted steps. Of course, the telecom space is one of the most important, but I do think that manufacturing will also play an important role. Banking and financial services already does to some degree.
Can I put in a question?
Yeah.
You talked about the 2 or 3 large IT deals that happened in Germany, for instance. I think you talked about the Volkswagen IT arm. And you said that there was no Indian company present in any of those big deals.
Yes.
You didn't answer the question. Why is that in your mind?
Well, I think one was that the effort that was made around this was not great enough, so it was not considered as much a target. And on the other hand, this was such a critical part of Volkswagen that it wouldn't have been tremendously easy to get that, honestly speaking, because there is a lot of questions of proprietary knowledge of how to design a car in that, where India is a growing manufacturing country for cars. At least Mr. Pirch would have looked very carefully at that Indian buyer. But there wasn't that much interest either. In smaller transactions, I was more surprised that there was not more more Indian involvement than in the GEDA's case. And I think in the very large transactions, only private equity, like the Merck situation, so, all the private equity players running around the Ranbaxys and the Dr. Reddy's to give them money to acquire a Merck in Germany, a couple of billion transaction. And I think you will see similar things in the IT space, that private equity will try to assist financially Indian companies to make major acquisitions. I don't think they were going to do them out of their own money. So coming back to this final question, I believe there's a tremendous chance for Indian companies. I believe it is exactly as Sudeep said, probably right to select one or two or maximum 3 European countries for reasons that may be industry specific or deal specific, and say I really want to be here, and so I'm going to make a difference in terms of making one good acquisition and then building top people in the country around that, and then conquering the space and then going from there. And I believe we're going to see at least 4 or 5 transactions of significant size this year from Indian companies. I mean the 100 plus, which have been rare from Indian companies. Whether there's going to be a mega transaction that an Indian company is involved in, I doubt it a little bit. I don't even know if it would be prudent, but if so, it would be only if private equity steps in financially. But I believe that, again, sector-specific, with sizable but not gigantic transactions, there's going to be a lot more between India and continental Europe.
Okay. Sudeep?